As we mentioned, big bank earnings kicking off with a bang this morning. JPMorgan, Wells Fargo, and Citigroup reporting its latest round of Q3 results. JPMorgan saw profits surge 35% from the same quarter last year. Wells Fargo posting a beat after taking advantage of higher interest rates to counteract a slowdown in lending. So, what do these results signal about the overall health of the U.S. financial system? Let's bring in Yahoo Finance's Ines Ferre for some answers. Ines.
Yeah, Akiko, and as you just mentioned, JPMorgan announcing its results, and we're seeing the stock higher. And analysts have been commenting on the earnings, and also JPMorgan's Jamie Dimon's CEO, his comments as well. He did comment about the war in Ukraine and about also the Israeli-Hamas conflict. But looking at some of the commentary from analysts, so you've got Evercore ISI that writes that the firm continues to defy gravity, but sends up some caution flags, talking about the results overall, though, being pretty darn good considering the backdrop. Piper Sandler also saying that all told, another very solid quarter with an improved outlook. And just looking through the earnings call as well, Jeremy Barnum, the CFO of the company, he was asked about the scenario of recession, about credit, and about seeing some softness on the consumer or on the commercial side. And the CFO basically saying that their economists had as their central case outlook that included a very mild recession. And he said, we're still they still have their reserve at a significantly higher unemployment rate on a weighted average basis, but that's their central basis outlook. Also talking on the call, saying we continue to see the normalization story play out and consumer more or less exactly as expected. Taking a look also at some of the commentary that came out of Citi posting a better than expected revenue, expenses, and profit. Its fixed income trading jumped 14%, more than 4%. That's more than a 4% increase than expected. And looking at what the Citi's management was talking about, Citi warned of an uptick in credit card losses in the fourth quarter. Now, having said this, the bank beat earnings estimates on better than expected revenue and strong trading, investment banking, and also net interest income, as I mentioned, Akiko.
Yeah, and as you know, even though we're seeing those three major banks at least getting a lift on the back of the results, the reality being that credit is tightening, continuing to tighten. We saw some of that reflected in the numbers. What did we hear from some of these banks, particularly about loan losses and what their expectation is going into year end as we continue to see the effects of the Fed's policy take hold?
Yeah, and as you were just mentioning that, also, I just want to mention something that regarding some of this commentary from management. Mark Mason, CFO of Citi, talking about that the bank still expects a mild recession in the second half of 2024, but that the labor markets are holding up for now, and that the consumer has been resilient. The banks have been preparing for, they're very prepared for loan losses, and we have seen that they're, as I mentioned, they have their reserves that have been higher in the expectation of loan losses. But we have seen tightening credit for certain. And big part of the industry that they're looking at, of course, is the commercial space as well, and commercial real estate as well, which is something that we know that has been in distress.
Yeah, certainly going to be a big concern and a focus moving forward. And that's Ferre. Thanks so much for that.
Thanks.